Hi everyone, I'm Stan from Eagle Vision. I'm here with Andrew from Urban Commercial. Hi Andrew.
Hey Stan.
And we're talking about commercial tenancies and what landlords can do with commercial projects to improve some of their yields. And in today's episode, we're going to talk about asset maximization through some of the strategies that Andrew and his team have been implementing over the last 12 to 15 years. So Andrew, what would you say for property developers that want to get the most out of their asset? What do they need to do?
Really, they've got to find the highest and best use of that asset, and sometimes they buy an underperforming property.
Yep.
And that underperforming property could be transformed into something else that will really achieve its highest and best use, valuation wise, cash flow wise.
Yep.
So there are things that you can do depending on the structure of the leases that are currently in place.
Yep.
There are things that you can do to either reposition the property or really redevelop the property.
Yep. And so when you say reposition the property, what does that actually mean?
The case could be that you buy a shopping centre or a group of shops, and then you have one major anchor tenant, and that anchor tenant could be struggling.
Yep.
The case could be that you could section that major tenancy off into 2 or more tenancies.
Yep.
To achieve a higher rate per square metre in terms of your face rent, and get a few other uses in there, just complementary uses to really have more sustainable tenants for the longer term. Sometimes the bigger tenancies might struggle. Carving it up and having a few smaller tenancies within one major shop is one way.
Increase the yield as well.
Yeah, one way to do that. You might acquire a property that its highest and best use definitely isn't what it is currently, and you could totally change the use of that property. You'd have to go through a planning application and a development application, spend a bit of money, source externally someone else to replace that existing tenant. Really, we'd classify that as repositioning a property. Which there's it happens a lot more than you would think. Let's say one of our clients had a supermarket tenancy. The supermarket, the turnover wasn't doing so well, but there was an opportunity to put in a childcare centre operator, spend a few $1 million on the property, get a 20-year lease to an ASX listed company, and certainly the return, really the return on the investment certainly went up. And they had the security of a long-term lease to a good quality tenant, viable business within that location.
Is there any rules of thumb or something that's fairly obvious when an asset is underperforming?
You can sort of tell when it comes to certain categories of retail tenants, whether they're performing or underperforming. If you walk into a supermarket and there's not much stock on the shelves, that's a pretty clear indicator. If you sit in the car park in your car for 5 hours and see that there's not many people coming to and from the supermarket, as an example, that's a pretty clear sign as well. But really, competition between supermarkets is one thing. People like newer, people stick to certain brands.
So it's easier to see it with supermarkets or maybe smaller tenancies. Is there any kind of idea about that?
A lot of it depends on the operator as well. So you could have a small retail tenant, which is be classified as a specialty tenancy. Certain sectors might struggle more than others, especially in harder times like we have now.
That's all we wanted to cover in today's episode for maximisation of various assets. And next time around, we'll actually talk about development consultancy and what can be done in that regard. Thank you for watching.